Hi there, welcome to the Stockscores Market Minutes for November 28th, 2011. Quick reminder that you can register for my free weekly newsletter at the address that you see there on screen. Alright, let's get into the analysis. Starting off with a chart of the euro. That chart continues to show a falling wedge pattern. The euro gapped up this morning with some news about Italy maybe having a solution to the Italian debt problems, but it also faded into the close and ended up closing at the low of the day or very near the low of the day, and therefore that bearish downward trend remains in place. Now, this market is nearing support, and so we could see a bounce soon, and certainly a break out of this falling wedge pattern would be optimistic, but until that time we should remain pessimistic about the euro. The chart of the US dollar is almost the exact opposite. It is in a rising wedge. It is coming up to resistance, so the upward trend is still intact, and we should expect it to probably get stuck up in here. And again, if you get a breakdown through the bottom of that wedge, that would be a signal that the US dollar is going to go down. That would be good for stocks, good for commodities, but as it stands right now, the US dollar is negative on all those other things. Chart for gold. Despite the strength in the US dollar, gold is held up pretty well. Usually we see gold go down when the US dollar goes up. Right now it is in that long-term upward bullish trend, and we have some falling tops in the short term. Really what that means is that the market is building a pennant pattern, and a pennant pattern typically moves out of the pennant in the direction it moved into the pennant. So given that this chart was in an upward trend going into the pennant, we should expect a trend out of that pennant to be up as well. But of course, if we break that upward trend line, we should be very cautious with gold. So for now, remain optimistic, but it's going to be less of a strong trend in the near term simply because it's consolidating into that pennant pattern. In other words, investors are growing more confident about price and they're trading it with less volatility. Alright, here's a chart for oil. It had a pretty good run through October and the first part of November. It hit resistance where it has gotten stuck, and now the question is whether it can move back up to resistance or if it forms a falling top here. If it forms a falling top and then breaks this upward trend line, then I'm afraid that oil is likely headed lower. So I remain optimistic on oil right now, but cautiously so because it is flirting with that upward trend. Chart for the S&P 500 is a pretty crazy one. We can see all kinds of wild moves, and of course anyone who's been investing in the market in the last few months knows that it has been a pretty difficult time to invest in stocks, and that's because there really hasn't been a consistent longer term trend. We've had short bursts up and down. The most recent was the sell-off last week. Now we broke that very short-term downward trend line today, although not decisively so. The market actually fell off for most of the day from the open, not to be unexpected after a big gap up. However, the mood here with these falling tops is still in place. We could see a little bit of a rally here, but I think it could just be a sucker rally and we're ultimately headed lower. Critical point in all of that will be what happens with the euro and the US dollar. If the euro can strengthen, the US dollar weaken, well, that will be good for stocks. TSX, of course, is heavily based on commodities market, and it is in a downward trend. It has been trying to break its downward trend. It broke the shortest version of that, but the longer term version still remains intact, and we continue to have these falling tops in place. So I would say that we should be pretty cautious and pessimistic with this market right now. Although if we could build a little base here, that would set us up for a head and shoulders bottom, and ultimately a break out of that downward trend line would be good. For now, let's remain pessimistic. Alright, the next thing I want to do is give you a little overview of the market scan tool, because we've implemented some new charting changes on Stockscores which make running market scans on Stockscores.com that much more enjoyable. Now let me show you how that works. Once you're in Stockscores.com, you go to the market scan tool from Tools. Now of course you need to be a member of Stockscores. Whether you are an advanced or pro member will give you different kinds of access to this tool. Once you're in the tool, you can select a scan. So what I'm going to do today is Surprise Canadian. This is a new market scan that looks for stocks that have had an abnormal up day, and then we look at the chart pattern to see if there's any sign of optimism in that chart. So I can run this report, and it goes for every stock that trades in Canada, and it quickly found 37 that meet the criteria of that strategy. Now my next step is to say select all and view them in the gallery, where I can now look through these charts 10 per page in fairly short order. So in this particular stock, you can see that it had an abnormal update, but it still hasn't broken that long-term downward trend. So that would be a reason to pass on it. Now I can continue through these in this gallery chart viewer, looking for the right kind of pattern. Now once you get good at this, you can get pretty fast at going through the charts. I've done this a little while, so I start to see certain things after time. Here's a particular stock that is bouncing off of some support. You can see that it tends to bounce right off around that 230, 240 price range. It looks like it's doing that again, so that is something that's kind of interesting. Now you can also view these charts one at a time rather than look at them in the gallery viewer. Click on slideshow here, and that will give you the ability to look at a larger chart in a slideshow view. Now if you wanted to look inside the chart, let's jump ahead to that PZG one here. If we wanted to look at the intraday chart, it's now possible to do that. I could choose a 5-day, and then now I can see what went on intraday on that particular chart. So that's kind of a nice feature. And here we can see on the 15-day that it is able to actually break that little downward trend line. Now is it a great chart? Not particularly, but that's how we run this. Now not only can you advance through these charts one at a time with the controls here at the top of the chart, but we've just added a feature where you can just use the arrow button on your computer so that you can go through them fairly quickly without having to play around with your mouse. And you can see that all of these stocks had a pretty good day to the upside today, and it's just then a question of whether it also has a good chart pattern, and that's what we're looking for here. So a nice little tool for those of you who like to research the market yourselves. I would certainly give this a look. So to summarize, I am pessimistic on the US and Canadian stock markets. The jump up today is encouraging, but there's more work to be done, and so I'm going to remain pessimistic until I can see the formation of a rising bottom on those charts. I'm neutral on gold and oil. I guess it's cautiously optimistic is another way to put it. Oil bumping up against resistance, gold trending sideways in a semi-optimistic pattern, that pennant pattern, but in general I think we need to be very careful with trading right now. Investors continue to be highly uncertain about the future. There really is no consistent longer term trend. If you're going to trade this market, you really have to trade the volatility, be in and out in very short term time periods. Otherwise, it's a good time to sit in cash or be short some of these indexes. Well, that has been the Stockscores Market Minutes for November 28th, 2011. Again, for more information on what we do at Stockscores, including registering for that newsletter, go to www.stockscores.com. Have a great week in the market and trade well.